Good morning. Happy 4th of July. It's Friday, July 4th, 2025. This is Rob Sin at CO Technician on X, at Goldfinger on co.ca, and this is Goldfinger Capital on YouTube. And you can also find me on Substack. Before we get into today's video, focused on the big, beautiful bill and what it means for everything, please hit the like and subscribe button just below. I really appreciate that. If you get value from my content, if you enjoyed this video, if you learned something, feel free to share it with friends and family and give it a like. So, something really important happened yesterday, and there's a lot to it, quite frankly. And this is the bill, congress.gov, if you want to read it. It's hundreds of pages long, a lot of minutia in here. I've reviewed it. I've reviewed the summary. I've taken away some key points from this bill and what it might mean for markets, for US Treasury debt, and even for mining. So let's get into it. I'm going to start by saying that a long time ago, my dear father used to tell me about politicians and politics and why the national debt never goes down. And he basically said that raising taxes is unpopular and 100% surefire way for a politician to get voted out of office. And spending cuts are also unpopular. So just the natural trend in a democratic process is to consistently get a little bit closer and closer to populism. And we're seeing that in the United States today. We're seeing it in other countries like the UK, Canada, for sure. What can you do for certain constituencies? How can you pander to buy votes? And that's just the way of the world. You got to give something to get something, right? It's a very transactional world. This is a very transactional president. Washington, D.C. is a very transactional place. So we have a transactional bill that just got passed, and it's a very, very big bill with very big implications. And I understand what Trump is doing here. At least I think I understand mostly what he's doing here. There might be some things that are left, behind the scenes. But, you know, uh, going back to my father's comments, it's just that the politicians can never vote for austerity. It's just it's so unpopular. And so even some of these right-wing conservative leaning Congress members, senators, and congressmen, they folded on this thing because the stakes were so high and the pressure was intense. This president puts a lot of pressure on. And basically, some of these members of the House felt that their political careers were on the line here if they didn't vote for this. And so they folded like a wet blanket, right? And so that's what happens over and over again. Thinking back to like Greece, you guys recall the Eurozone crisis in 2010, 2011, 2012? Well, the country of Greece went through a period of extreme austerity that very few Western countries have experienced in modern times. And how did that happen? Well, it didn't happen by their own will, their own politicians. It was forced upon them by the European Union or the Eurozone. They're a Eurozone country, they're an EU country, and they had to give in to what the overseers in Brussels forced upon them, or else they would be ejected from the Eurozone and from the EU potentially, and their economy would have sunk into third world status, right? So it wasn't voluntary that Greece went into austerity. It was really forced upon them due to an economic crisis and due to the predicament the country found themselves in. Well, the United States is not anything like that. We're a sovereign nation, biggest economy, reserve currency, world leader. So nobody tells the U.S. what to do, including with debt and deficits and tax cuts and spending. And certainly nobody tells Donald Trump what to do. So he got his way here. And I mean, the numbers are pretty daunting. I'm going to hand it over to Ray Dalio here and listen to him for a couple of minutes, and then I'll be back.
I was recently down in Washington, D.C., meeting with senior people on both sides, the Republican side and the Democratic side, about the budget deficit. And virtually everybody agrees that you have to get the budget deficit down to 3% of GDP. And then I say, why can't we make, or you make, a pledge that you will get it down to 3%? And they explain the absolutist policies that must exist. And those are that you must make statements like, I will absolutely pledge not to raise your taxes, or I will absolutely pledge not to reduce your benefits. So that's the equivalent of saying, I will absolutely pledge not to change the trajectory we're on in order to have a better set of circumstances than the likely financial crash that we're going to have. So they all agree about the consequences of this debt problem, and they all agree that they cannot speak up because their constituents would throw them out of office, and their political parties will exert enough pressure on them that it is impossible to make those compromising statements and actions that bring together the revenue and the expenses to produce a good budget.
Going back to this big, beautiful bill. So we have tax cuts over the next decade totaling about $4 trillion. And so they're not taxing overtime. They're not taxing tips. Now, I'm really interested to see the implementation on no taxes on tips and how that works exactly. I'm sure there's going to be a lot of people trying to game that system over the next few years. So that'll be interesting to see, because a lot of people will just say, well, all my pay is tips, right? If you're in the service industry, they'll just say, don't pay me. I'll just take it all in tips. Yeah, that's interesting. So this is front-loaded tax cuts, trying to put more money in Americans' pockets to spend and consume, keep the can being kicked down the road for a few more years. A lot of this bill, the way this bill is structured, it's very easy to see. It's front-loading all the good stuff in the second half of 2025 and in 2026 and into 2027. And then the medicine starts to be taken towards the end of 2027 and into 2028, when the current president is starting to be preparing for his exit, right? So the good times, Americans love good times. We're always going to vote for a good time, right? This is the country with Las Vegas and a lot of other things, right? So we're always going to vote for good times, and we voted for a good time here in the big, beautiful bill. We'll worry about paying the credit card bill and the hotel bill and the casino bill later. 2030, 2031. Don't worry. We'll take care of that later. But for now, let's just cut taxes and spend, baby. Let's juice this economy. Let's get growth up, right? And let's get the stock market even higher. It's so perfect that here we are, the day after the big, beautiful bill passes. It's July 4th, Independence Day, and the S&P 500 is at an all-time high. America's back, baby, the golden age. So anyway, the tax cuts basically just go into the national debt. So basically, to put it really simply, all the tax cuts that are occurring in this bill, well, it's just gonna add to the debt. So whatever the debt is now, 37 trillion, it's going to be 39 or 40 trillion by the end of the year, and then by 2028, throw in another 3 or 4 trillion on top of what it would have already been if this bill didn't pass, just because we got to pay for the tax cuts, right? Yeah, that's the simplest way to think about this, right? And oh, there's some austerity in here. We're going to cut a little bit Medicare towards the end of 2026. It's a very small amount. Legal immigrants are no longer going to be eligible for Medicare or something. I don't really know the details on that. And then there's going to be some Medicaid rollbacks in 2027. That's short-term, assistance, and SNAP, basically welfare and food stamps. We're going to make some changes to those in 2027. But, there could be another bill that comes in 2026 that rolls that back. It's just the important part is we crammed in the tax cuts now and a bunch of other stuff that will be figured out over the coming weeks, a bunch of goodies for various interests. And then the clean energy credits, which obviously, like Tesla, Musk is probably not happy about that. But the rollback of those credits only kicks in 2028. So who knows what happens between now and 2028. So again, it's just like push out the medicine and bring forward the good stuff. Like this is the most American thing you could possibly do, right? Like, when people are selling timeshares or what have you, the salespeople, once the deal closes, they get their commission payment up front, regardless of how the investment or the deal works out longer term. Yeah, give me my commission up front, right? But now we've had this good news. I mean, clearly this is good for the stock market because you have uh, more government spending. We've got the debt ceiling raised another 5 trillion so we can refinance all that treasury paper that's due to roll over this year and next year. But now we actually have to make it happen, right? So that's going to be sort of the challenge here for the next few months for the Treasury, for the White House, even because it'd be one thing if it was like a couple trillion. That's no biggie for the U.S. Treasury to place, but 10 trillion in a relatively short period of time. There's going to be some big auctions going on here. And the Treasury Secretary basically saying, look, we don't want to refinance a lot of this debt at the 10-year or 20 or 30-year bond with 10-year notes and 20 or 30-year bonds. We don't want to get stuck paying 4% plus, interest rates for a decade or more. So what we're going to do is we're just going to cram this into the bills in the front end of the curve. And even though the Fed funds rate is 4.5%, like, the 2-year note yield is actually under 4%, right? So there could be a slight savings by cramming a lot of the stuff in the front end. And then if interest rates are lower a year or so from now, then the Treasury could refinance with longer term paper, right? That's sort of the thought here. But, it's kind of interesting because most previous Treasury secretaries haven't tried to game, interest rates. Like forecasting interest rates is like forecasting the stock market. It's pretty tricky. In fact, some might even say it's harder, especially like when we have this big, beautiful growth bill. It's kind of interesting that the Treasury Secretary is a very sharp guy, thinks that interest rates should go lower when we've crammed in all this big, beautiful growth here over the next couple of years with this fiscal dominance that's taking over, right? So I don't know, but this is obviously a big win for Trump, and the stock market loves it. As soon as this became pretty clear that this was going to get through the House and Senate, stock market rallied at the end of June. And obviously, the Iran-Israel thing sort of came to a conclusion, at least a temporary conclusion, and that helped as well. But go ahead and enjoy some weekend reading here, reading this big beautiful bill, which I assure you that 99% of members of Congress did not read in totality. But there's a lot of stuff in here about oil and gas, about mining, federal lands, energy, water, public works. There's a lot of stuff here. Rescission of funding to address air pollution at schools. You see how all this stuff is against like the environmental crowd? A lot of stuff that the environmentalists are going to be up in arms about, guys, in here. A lot. Coal leasing, coal royalties. So there's a lot of stuff about mining in here. And it's no accident the Freeport McMoran, big U.S. copper and gold producer, went out at a new 52-week high, yesterday. It's also not an accident that Treasury yield, the 10-year Treasury yield, was up at the end of the week from a bottom of 4.20% to a close at 4.35%. I wouldn't be surprised, actually, and this is a little bit of a market call here. I think Treasury yields could go back, the 10-year could go back above 4.5% here by the end of August. And I know I'm a dollar bear, big time, big time. But just some of the flow dynamics here with this the Treasury refunding that has to happen here, and especially if yields go up, that will bring some flows into dollars, I would think. Regardless of whatever the fiscal situation is longer term and the debt, which is surely going to be in a crisis longer term, near term, so next couple of months, there is the potential for a counter trend bounce in the US dollar and also an uptick in Treasury yields as all that paper has to get placed. And we got the big, beautiful growth bill passed. So there's a lot of things that say like bonds might be heavy here for the next couple of months and yields might go up. So let's talk about mining. I'm just going to hit on the high notes here, the most important things, but the strategic intent of the big beautiful bill for mining and minerals exploration and critical minerals, rare earths, copper, all that stuff is to strengthen U.S. mineral security, raw material supply chains, reshore essential supply chains. So reshoring. So we are going to build a fortress raw material supply chain here in North America to undermine Chinese dominance of these supply chains, right? And also supports the expansion of technology and energy. So like EVs, AI data centers, nuclear energy, all of it. So we're building out our industrial base here in the US, and critical minerals and mining, hard rock mining, are a very important part of it. So this is the big thing. For junior mining companies, this is a big thing. Streamlining and fast tracking the permitting process, right? So there's a whole bunch of stuff, and there's this other memorandum back from March, USDA, basically the overseer of the U.S. Forest Service. I'm not going to go into all that. It's pretty technical, but basically everything is about streamlining and speeding up permitting. So instead of having these extended permitting processes that can drag on for years, a lot of it is, if it's like a drill permit, it's something simple, they're going to have 30 days to respond. Some other things might be 45 days, and then for an actual mining permit application, 12 months. So they must approve or reject. And this is actually for mining. This is not for exploration or drilling, anything. This is actually for mining. So this is a whole game changer, because when we think of permitting timelines, like for example, in Canada, even a drill permit could take a year in Canada, right? So now in the US, we're saying 30 to 45 days max. And for an actual mining permit, like to operate a mine, even, in a better administration in the US, we're talking 3 to 4 years, right? Now they're saying 12 months. Okay. So we'll see. The proof is in the pudding. This is just on paper right now. Let's see it implemented. Let's see some projects actually get approved. But this seems very positive. They're expanding the designation more minerals like copper, nickel, zinc, and uranium are critical minerals. It's official now. Um, and yeah, so we're supporting tech industries, EVs, AI, semiconductor, and military uses, right? Which is big because the US is now a major global producer of Patriot missiles, of fighter jets, of tanks, artillery shells, right? Like we've been shipping that stuff to Ukraine and Israel, Poland, all kinds of places, right? So that's big business now, and Trump loves that. And then this is the big one. So the tax incentives, and this, I want to see more on this, and I actually would love to have a guest come on to do an interview to talk about this. But so they're going to rescind federal royalties for a 10-year period, right? So this is incentivizing, like, explore, find new economic ore bodies in the US and mine it. And the federal government is supporting the industry every step of the way. This is a complete about face. This is a 180 turn from where the industry was 20 or 30 years ago in the US, where the federal government was a heavy weight, a burden, pressing down on the industry and stifling it. Now this is a complete game changer. And now the US government is going to build stockpiles of critical minerals, lithium, rare earths, cobalt, graphite, maybe copper, uranium, et cetera, et cetera. Well, we already have that to some extent. But wow, prioritizes domestic sources for purchases, effectively creating a guaranteed buyer for US miners. So we don't have to ship it to China. We don't When we have to ship ore and minerals for processing to China, it cuts into the profit margin. It screws up the economics. If we are selling it to the US government right here without having to transport it long distances, that's a complete game changer. And then the processing and refining, this remains to be seen. Are we really going to build smelters on DoD land? Are we going to, processing facilities, capacity? This is going to take a lot of infrastructure investment, and it's going to have to be funded by the federal government because no private industry wants to really get into this low margin business, low margin, high risk, high regulatory burden business, right? That's why we don't have smelters in the US. We got two of them. And I could go on, right? But the US is now backing its hard rock mining industry and saying we want to produce and vertically integrate supply chains for copper, lithium, nickel, rare earths, cobalt, graphite, uranium, molybdenum, tin, and I could go on. The big, beautiful bill, you can have whatever opinion you want about it and the pork involved, the tax cuts, the increase in national debt, the deficit, but this is a game changer for the US mining industry. And man, if you're a Canadian listed junior with a quality project or projects in the US, you just got a big boost. Thank you for watching this video. Enjoy your 4th of July and your weekend. Cheers.